Hey, hello everyone. Welcome back to our channel Part-Time IT Investor. So as you can see from the thumbnail, guys, okay, that yesterday I warned you that our portfolio can crash. Okay, so please do check and calculate how much your portfolio will crash. Okay, and exactly today, market has fallen by 600 points. Okay, almost 14 lakh crore wiped out from the market. Okay, and in this adverse situation, with the help of the tool, how I was able to recover some of my loss by hedging my portfolio. Okay, so without wasting time, let's quickly jump on it. All right. Okay, so before we move, I think there's nothing to discuss, guys, on today on the heat map as well as on the chart because everything is in the red. Only two stocks which were in the green is Power Grid and SCL in Nifty 50. So I think power sector will be a next big opportunity to invest in such downtime where the energy crises are there. So we will discuss and get a separate video on the same. Okay, so before we move, let's quickly check how are the global indicators doing. So I think there is a positivity in global indicator because Trump has mentioned that he is going to stop attacking Iran for the next 5 days. But I think that claim has been rejected by the Iran government that they have not received any such message from Trump administration, and there is no currently discussion going on with the US on ceasefire. Okay, so I think there's some big gap in terms of what Trump is saying versus what Iran is saying, and this can be just a market manipulation to cool down the oil prices. Okay, second thing, gold prices are falling down. Now is a good time to buy. I think somewhere around 1,32,000 in order to hedge your portfolio. Brent crude oil has fallen as a result of Trump input. Same thing for crude oil. Gift Nifty is showing almost 800-point gap up opening. Okay, so this can fiddle out by tomorrow morning if Iran again confirms the same, and it will impact the market. So we will see it tomorrow morning how it will go. We are still not out of the wood for the USD INR, which is still above 93. Yesterday it touched as high as around 94. Now it's currently trading above 93. Okay, so resultant this will impact IT stocks in positive way. We can see Infosys ADR trading 2% over there, and I think we can also check the Dr. Reddy lab how it is there. So only two sector which will benefit from falling rupee. Okay, ICICI Bank ADR is again positive as a result of positive news from Trump. Okay, and HDFC Bank ADR is mildly positive, and maybe due to the issue which is happening in HDFC Bank due to the false selling of 81 bonds in UAE branch of HDFC Bank. Okay, so there's nothing much to discuss. Just a caution over here that if in overnight, if the news comes in that Iran is also aligned towards the ceasefire, then yes, this rally of 1,800 point can further go to around 1,000 points. Okay, so let's quickly go ahead and check and discuss the part two. Okay, part two of our AI tool. Today I'm going to share the passcode, okay, to unlock the advanced strategy. Okay, so for the people who is watching this video for the first time, I will just quickly cover up. So I have created a tool, beta calculator tool, which will tell how much your portfolio will fall against the Nifty fall. Okay, and mostly the common practice to hedge the portfolio is buying the put. Okay, that is a hedge put, and I'm not big fan of it because it's kind of buying insurance, and in insurance once we pay the premium we need to forget about it. Okay, I'm more like an LIC kind of a guy where you pay where you get a cashback. Okay, or cashback policy where I pay the premium, but once it matures I will get some part of the cashback. Okay, so my thought process is that why to leave the theta decay on the table. Okay, so this is where the other advanced strategy comes into picture, which is being used for hedging the portfolio. So without wasting time, let's quickly go ahead and check the part two of it. Okay, before we go to part two, okay, I think current update upon my own net position. So I think if you're not seen my older video, you can check that I have created double calendar spread. Okay, and this was the spread, and that resulted into 5,500 profit. Okay, so that is a very good profit, guys, and that's how I hedge my portfolio. Okay, collecting bits and pieces and collecting the decay. Okay, so now let's quickly move to our beta calculator. Okay, we are here in our tool, which is Portfolio Beta and Option Edge Calculator, developed by a part-time at Investor Lab. Okay, so if you're new to our channel, you can find this link in yesterday videos. I will also put the link of this free app in today's video. Okay, and what is a passcode for today? So passcode to unlock the advanced strategy is Nifty 2026. Okay, let me again reiterate, Nifty all in caps 2026. Okay, so let me put it over here. So it will be Nifty 2026. Done. So the advanced strategy which I was talking about is nothing but spread. Okay, so either you can create a ratio spread, which is like this. Okay, or you can create a bear call spread, which is like this. Okay, so instead of buying the put and forgetting about the premium which you are paying, okay, I am of the thought process to create a strategy like bear call spread. So you might have heard of a concept called covered call strategy. So it is similar kind of that concept, but we are applying it for the whole portfolio. Okay, whole portfolio over here. Okay, so that's what we are going to do it over here. Okay, so our Nifty lot size is around 65. Okay, and let's say I wanted to target 0.20 delta. Okay, so 0.20 delta is a combined delta of strategy, which will be the bear call strategy. Okay, since it's 0.20 delta, it will be very far away. Okay, and that's how we will be able to make some money out of it. Okay, we might not be able to protect the complete fall. Okay, but some part of it. For example, today, okay, I earned almost 10,000. Okay, which is almost, I think, one third of my portfolio loss. So my portfolio is around 7,32,000. Okay, so it fell somewhere around 2.3%. So it was showing around 24K in loss. So you can say roughly half of it I was able to recover it today. Okay, by hedging it. So let's quickly jump to it, how I'm doing it. So I have selected the file, already uploaded my holdings. Okay, it's one of my trading account which I'm using for trading. Okay, and we will say calculate the hedge from the file. So as you can see over here, okay, there are two things. So yesterday, if you have seen my video, it was showing almost 0.99% fall, but today it is showing 1.45%. The because crash mode is activated. VIX is almost 22.81%. Okay, so we have some internal calculation which I have put on in there, so that will automatically increase the portfolio fall based upon the volatility and global market condition. Okay, so what it means that if Nifty falls by 1%, so my portfolio will fall by 1.45%. Okay, so let's ask Gemini what it thinks about my portfolio. So it says that my portfolio is highly sensitive to market swing. While you will outperform in bull run, a Nifty correction will hit you harder than most. Hedging is strongly advised. I completely agree with you, buddy. Okay, so my daily routine is that the moment market opens, okay, I am running this tool to check whether the hedge position which I'm maintaining is correct, okay, or not. For example, yesterday it was zero point 0.9, okay, but today is 1.45. So let's say I'm maintaining two lot of bear call spread. Due to the increased volatility, I might need to increase it to 3. So I need to buy another one. So that's how I play around. Okay, so I will not go into all of the individual details which I already covered yesterday. Okay, as you can see over here, so it is showing that I need to buy 4 lot of bear call spread. Okay, if strategy net strategy delta will be zero point 0.2. Okay, so it's around 7,32,000. Okay, so for example, if it fell by 1%, it will cost me around 10k in my M2M loss. Okay, 1% of 7 like 30,000 is 7,320, and I add another 3,000 to it, so almost around 10k I'll be losing. So let's see how much we will be able to recover it. Okay, if we go for the bear call spread. Okay, so I will move to the Sensibull now. Okay, before we move to the strategy builder, just a confirmation, like you can see that I booked profit of around 10,000 today. Okay, and end of the day, I also initiated my next hedge strategy in Nifty. Okay, so that's why we can see that current hedge strategy is showing around 2,167. So even if market gap ups open by 1,000 point, okay, I will be still good. Okay, so let's see how things will go. But the point which I'm trying to show it over here, that like my portfolio was bleeding around 24k in portfolio, but today I was able to recover 10k out of it. Okay, so almost we can say 40% of loss which I have recovered. But the main takeaway over here is guys, that not every day we are going to have a black swan event. Okay, and most of the days I think market will be still in the range of 1%, 2%, and that theta decay will be acting as a covered call. Okay, that theta decay or the strategy which we are doing will be acting as a cover call. Okay, and thus giving me consistent profit. Okay, and that's why I call it as an income strategy. Okay, so let's move to the strategy builder now. So here we are in the strategy builder, and I want to create a beer call spread for April. Okay, so what we see basically, okay, I need to have a strategy, okay, which will be having 0.25 delta. Okay, and or 0.25, or it was zero point 0.2, I think 0.2 delta. Okay, if I multiply it over here. Okay, so here total should be 0.25 delta. Okay, so let's quickly go ahead and check over here. So I will make it to, I think it was 4, and then let's move it to this. Okay, I am back. So it takes some time to calibrate it. So let me walk you through. So what I did, I adjusted this strike price, okay, which is 24,900 and 25,700, such that the total, okay, total delta which I will get over here is around 0 0.2. It cannot be perfect 0 0.2. It is nearby 0 0.2 over here. Okay, if you want to do it perfect, so let me also try to move it away a bit, and let's see, it is there. And let me also try to move it closer. So let's see the Greek. No, it says 0.22 is there. Okay. All right. So okay, this is how we need to play, guys. So that's why I don't like it. Yeah, it's perfect 0.2 now. Okay. So zero point 0.2, we can see that probability of profit is 90% over here. Okay, and the range you can see is almost around 10.6%. Okay, so we have 8 months, and maximum profit is around 8%. Okay, forget about the 8%, it is around 13,962. Okay, and what we calculated, okay, let's go to the payoff graph over here. Okay, so let's say that by market will fall by another 4%. Okay, so let's do it over here, or let's say 2%. Okay, and it opens gap down, okay, tomorrow, and it remains gap down. Okay, so if you see how much profit we will be making is around 6,460. Okay, and as per our strategy, okay, 1.5% is almost around 10,000. Okay, fall in my portfolio, and 2% will be around another 7,000, or almost another 3,000 is to be added, right? So 13,000, almost 13,500. Okay, so my portfolio will be in the loss of 13,500. Okay, and tomorrow at the gap down, I can book 6,460 profit. Okay, to- that is almost around 50%. Okay, and that's what I demonstrated today in my actual portfolio. I made 10K and my portfolio was down by 23K. Okay, I was able to recover it. Okay, and I have further moved away. Okay, I have further moved away my strategy from zero point 0.2 delta. Okay, now it has become 0.15 delta after the fall. If I go over here, let's reset this. Okay, you can see 0.25 delta. So after further fall, what I'm doing, I'm further moving this away to zero point 0.1 delta. The reason for that, I have already covered 50% of my loss, which was there as a part of fall. Okay, and probability of profit is around 90%. Okay, and the range which I'm getting is 10.6% over here. Okay, now let's also talk about the fund needed. I'm I only need 1.78 lakhs to hedge my portfolio of 7 lakh 32,000. Okay, so this is how, by simply selling the bear call spread, okay, and doing your math, okay, doing your math right, you will be able to not only hedge your portfolio but also have some income from it. The reason for that, not every day will be the black swan event, okay, and that's how even I think institutional investors, they are also doing the covered call strategy as well. Okay, so I hope you would have learned something from this and you have loved it. Okay, so if you're liking the content and you are gaining knowledge, please don't forget to like, subscribe, and comment for part two. And if you are also a busy professional like me, okay, and you don't have much of time to do the trading, so these are the techniques which I have developed based upon my learning. Okay, so I'm doing the heavy lifting for you guys. So please do like, subscribe, and comment, and also provide some suggestion if you have any. Okay, so let's see how market will open tomorrow. See you tomorrow in the evening then. Bye bye for now.